just want to share with you again the answer for tutorial 1, question number 6. Last time we stopped at the statements of financial position. Okay, you just check your answers there for statements of financial positions. Okay, we already discussed a little bit last time. So just check the answer for that one. Yeah? Okay, if there is any different answer, check the answers. Okay, and then after that, once you finish with this one, so we're going to proceed with your tutorials 2. Okay, so actually for tutorials 1, question number 6, I already give you the answer. But there's something happens to the recorded version for the last class. So I just show you again the answer for this one. I just copy the answer for this one. Okay. Okay, done with question 6, the answer for question 6. Okay, the last one here is about the NCI based on a net assets. If in a net assets, we're going to have the value of NCI. If you are using the net assets, means that there's no goodwill for the NCI. Okay, so can we proceed with tutorials 2? Any of you? Is it okay? Can we proceed with tutorials 2? You ready with that one, with the tutorials 2? We see there, isn't it? Okay, so we're going to proceed with tutorial 2. Okay, so for tutorials 2, going to analyze items for tutorials 2. Okay, because this is a format for your midsem. The questions will be like this. We're going to have a long statements given, like the one that you have for questions 4, and then later on you need to prepare the eliminations, prepare the consolidated journal entry, prepare for the financial consolidated financial statements. Okay, we are going to do for the first one, the first questions. Going to proceed with the first question. So for the first questions, we analyze item by items, and then after that, you're going to give me the answer for that one. Yeah. Okay, so we're going to proceed with this one. The first one is question 1. Okay, for question 1, on 31st December 2018, W acquired 80% interest in R at a purchase considerations of 45 million, and then a building worth of 1 million at 31st December 2018 was at 31st December. Okay, purchase considerations was 45, and then the building was 1 million as at 31st December 2018 was not reflect in the R books, accounts. At the date of requisition, the net assets was represented by equity as a follow without this building's value. So it means that building which is not yet recognized. So the amount of buildings, okay, so since the building is not yet recognized, okay, that one we're going to increase the value of your revaluation reserve. This one we increase the value of a revaluation reserve. Okay, because the asset is not yet recognized. So we're going to increase the buildings. You're going to debit a buildings. Okay, just prepare the journal entry based on the items. Later on you need to suit with the one that you have in your answer. Make sure that your answer have this one. You're going to have a debit a buildings of 1 million. Okay, and then credit the revaluation reserve of 1 million. So this is what you have for the first journal entry to record for the increase in the value of the assets, the value which is not yet recognized, asset which is not yet recognized. Okay, and then this is the net asset. Net asset at the acquisition stage. So you're going to have the net assets that we have here. Shares capital, returns earning, and revaluations reserve. All together, you're going to have 52. Okay, 52. And then remember that you have 1 plus 1 from a revaluation reserve. So at the end, your net assets is supposed to be 53. So this is the net asset of R. Okay. This is a financial statement for both of the company. So you're going to look at the shares capital here is 30. Shares capital 20. Return profit 28. This is already on 31st December 2020. Means that a year after that. A year after that, we have 2019 and then 2020. Yeah, so a year after that, so there is a changes in the return profit. Okay, and then we're going to have revaluation reserve here. Okay, there is also a changes in the revaluation reserve. Okay, the amount that we have here. Okay, and then we are going to have all the assets here and the liabilities. So we just focus on the items that we have. Okay, the profit for the year ended on 31st December for W here is 20 million. So this one is a profit for our parents. Okay, and then profit for the subsidiaries here is 5 million. Yeah. The R returns of earnings as at 31st December 2019 means that this is a RE brought forward. Yeah. So the RE brought forward here is 23 million. So we need to know this information here because we want to prepare for the NCI letter. NCI. Okay, the NCI was measured at proportionate shares of identifiable assets. So the value of the NCI here, so the NCI value here will be 20% based on the shares, time with the fair value, the net identifiable assets here is 53. Yeah? So the amount that you're going to have here for NCI here will be 10.6. Okay, so we're going to calculate for the goodwills. Okay, we're going to calculate for the goodwill. So remember that the goodwills here is the NCI, the COI plus NCI. The COI here is 45. NCI that you have here is 10.6. And then minus net identifiable assets here is 53. So the amount of goodwill that you have here is 2.6. This 2.6 is solely to parents because the NCI using a professional net proportionate shares of identifiable assets. So again, the value 2.6 here is a goodwill. So that goodwill is solely to parents. So the things that you need to do here is to prepare a consolidated journal entries. We already prepared first one for the buildings, and then the second one is to prepare a consolidated financial statements. Okay, we start with a consolidated journal entry. Okay, Paul, can you help me with this journal entry that you have with you? Can you just read from your tutorials, answer from your tutorial? We already done for a buildings and then credit revaluation reserve for 1 million. Okay, the rest. What will be the next journal entries? Buildings, the goodwills already calculate 2.6. Yeah? Okay, so the next one. Paul, can you prepare the second journal entry, Paul? Mm-hmm. 2.4 or 24? 24. Mm-hmm. 9.6. Okay. Mm-hmm. Okay. Mm-hmm. Mm-hmm. 35. Okay. COI or investment in R, yeah? Either one, yeah? Okay, the other one, the third journal entry. Mm-hmm. Mm-hmm. One. Mm-hmm. Okay, 1 million. How do you calculate this 1 million, Paul? Mm-hmm. Okay, 5 million here is a profit for the year for R and then time is 0.2. Yeah. Okay. The next journal entry. Mm-hmm. Mm-hmm. 4.6. Mm-hmm. Mm-hmm. Mm. Okay, how do you calculate this one? 4.6. Mm-hmm. Mm. Because you are using the RE brought forward. Yeah? Okay. So done with that one. So we are done with the journal entry. So altogether you have 4 journal entry. Okay, so the first one is to record for the increase the value of the building. The second one is eliminations for the parents. The third one is for the NCI shares of profit. And then the last one is NCI in the statements of financial positions. Yeah. Okay, and then the next one is need to prepare a consolidated financial statement. The next question is to prepare a consolidated financial statement. Okay, so can you just proceed, Pua, with the next one for the consolidated financial statement? Pua? Okay. What statement that you have here? Uh-huh. You should start with a complete one, a consolidated statements of P&L. Okay, the title should be complete. Okay, you're going to have profit for the periods. Okay. Okay, 25 million here is 20 plus 5, 20 from parents. The other one is from subsidiaries. Okay, profit. Okay, and then mm, okay, continue. Parent. Mm, mm-hmm, mm-hmm, and then NCI 1 million. Okay, actually from here, if you look at here, the journal entries that we have here is 1 million we allocate to NCI. So for parents means that 25 minus 1, yeah? Okay, so this is what you have. NCI here from here, the journal entries here. So the rest, the remaining here, 25 minus 1. So you're going to have for parents 24. Instead of you calculate 80% time with 5 and then plus another 20, isn't it? So this is another method to calculate that one. Okay. So the next one is the statements of financial positions. Okay, for statements of financial positions here, can I just use this one? You just use the items that we have here. Okay, so what you have for shares capital, can you proceed with this one? They give me the answer for this one. So this is a consolidated financial position. Okay, you prepare in a proper format. I just give you the answer for this one. Okay, how much you have for shares capital, Sepua? Hmm. RE. Okay. Revaluation reserve. 26.6. Okay. Investment zero, isn't it? Zero here. Okay, 1 to 1. The next one, account receivables. I just use this one. Mm-hmm. Cash. Mm. Account payables. Account payable. Okay. So any item that we're going to add here, we're going to have a goodwill. Put it here. Can I put it here? Okay, goodwills. Okay, how much your goodwill here? Okay, any other items? All together. Okay, so I just want to know how you calculate this one. Shares capitals plus these two figures together. Uh-huh. Okay. Return profit add together and then mm-hmm, 4.6 million. Okay, 4.6 here is to the NCI, is it? 1 million here is the shares of profit. Okay. Revaluation reserve. Check out that one. Plus those two figure. Okay. Minus 8.8. Okay, 8.8. Hmm. Plus 1. Right? Ah. Mm-mm. Okay, the property. Property, add these two. Add another 1 million there. Okay. The rest is just add the figures, isn't it? Add the rest is okay. NCI. Oh, where is your NCI? Okay, you have one more NCI here. Mm. The NCI, how much you have for the NCI here? 20. Sorry? 23.2 for NCI? No. I think that because you prepare in the proper format, but the one that I give you is only based on this one, yeah? So you're going to have here is 14.2. Okay, where to get that 14.2 here? Is from 14.2 here is from the journal entry here. Okay, so 14.2. Okay, so thank you for. Okay, so the rest, do you have any different answers? Okay, the additional thing that you need to add to the statements of financial positions here is a goodwill and also the NCI, the new items that we're going to add to the. So at the end, your total assets and your total liability here. Okay, total assets and total liability. Total assets here will be 231,600. Yeah? It should be total asset which is equal to total liability plus equity. Yeah? Should be this figure 231,600. Yeah? Any of you have a different answer? Please. Okay, similar. Nara, okay. The rest, what about the rest? Same, yeah? So is that okay? So we're going to proceed with the second question here. Okay. So the second question here is about the sales, intra-group sales. Okay, we move to the next one, yeah? So who's going to prepare for this one? Iza, is it okay, Iza? Can I proceed with the next one? So Iza, can you prepare for the second question, Iza? Okay, questions 2. Okay, you're going to prepare together, eh? Okay, Iza, you help me with this one, huh? Okay, going to look at parents acquired subsidiary in 2018, 18% interest at the interest of the 20% interest at 32. The accounting policy is to measure NCI at the proportionate shares of net identifiable asset during the year. The intra-group sales of subsidiaries, okay, sales, subsidiaries sold to parent. So one subsidiary sold to parent, this one is an upstream sales. So upstream sales here will affect the profit of the subsidiary. So the ones that affect the profit of subsidiary are going to affect the NCI. Yeah? Okay. So it said that the sales was 40 millions and remains in the parent's ending inventory of 5 million. So you're going to have URP, yeah? URP carry forwards of 5 millions. Okay, 5 millions, sorry, 5,000 here. 5,000 and then you look at the selling price. The selling price, the profit margin here is 20%. So you're going to have here is 1,000. So 1,000 is URP carry forward. So carry forward means that in the current year. Yeah? So in the year 2019, you have URP brought forward. Okay, URP brought forward here is 6,000 time with 20%. So you're going to have 1.2. Okay, and then it said that the profit for the year here is 17. So that is a profit for the year. Okay, pre-acquisitions returns earning 10. And then returns earning at the beginning 2020. So this is your RE brought forward, yeah. RE brought forward 15,000, and then shares capital is 30, yeah. Okay, so this is what we have. So we need to prepare the journal entry for the transaction, assuming that this is without tax effect, and then the other one is with a tax effect. Okay, so Iza, can we proceed with this one? Without tax effect. Can we proceed with this one, the journal entry that we're going to have here? Okay. Iza? Iza? Okay, what will be the journal entry? The first one, to record for the sales. Okay.
Sale,
Sales, credit.
debit, it's US,
How much?
40,000.
30,000. Okay. The
Yeah.
second journal entry. Second journal entry. To record for the URP in a current year.
Debit, return profit,
Okay.
debit,
So you want to
return profit,
going to debit a return profit. And then,
credit US,
okay, how much you have for this one?
1,200.
This is URP brought forward, yeah? And then the third one. Third journal entry.
Debit
Going to-
US,
Okay, so this one is for the URP in a current year. Okay.
credit inventory.
Okay, done with that one. And then for parents, prepare the journal entry for parents, elimination for parents.
Debit share capital,
Mm.
debit return earning, credit investment in subsidiary.
How much you have for this one?
24,
Mm.
34,000, 8,000,
Mm.
32,000.
Okay. And then for NCI,
Debit NCI, CSPL,
mm-hmm.
credit NCI, CSFP,
Mm-hmm. Okay, how much you have for this one?
3,400.
So that
Yeah.
okay, and the journal entry for NCI.
Debit return, debit share capital,
Mm-hmm.
6,000,
Mm.
credit
Yeah.
return earning,
Checks
2,760.
share capital RE, and then the other one is NCI. Yeah? Sorry again, the figures here for shares capital is just
6,000.
6. Okay, the next RE.
2,760.
Okay.
8,760.
Okay. So okay, this one is okay. This one okay. Okay, where do you get this figure? For NCI, I just want to ask you about the NCI here. These two. How do you derive to this 3440 here? How do you derive to this?
70,000
Okay,
plus
17,000 plus
1,200
1,200, which is brought forward, and then
minus 100 and 1,000 time with 20%.
okay. And then about this one, RE here, 2760.
20,000 and 20% time with 13,800.
Okay, this one is 20% time with, again, is that?
18,800.
15 minus 1.2, isn't it?
Yes.
Okay. So that is what you have for the without tax effect. Okay. So check the rest. You check your answer if there is a difference. Okay, we proceed. Isa, can we proceed with the next one? With
Yes.
tax. Okay, so proceed with the tax. Okay, the rest, if you have any questions after this, I just want to finish with this one with tax first. Okay, so with tax, the first journal entry still the same, isn't it?
Yes.
Okay, same. This one is the same journal entry. The second one is a
Debit return earning brought forward.
okay, and then
Debit tax spent.
mhm.
Credit COS.
Okay, how much you have for this one? This one is 1.2. Okay, what about tax expense? Tax expense here is 24%, yeah? 24% time with this one. Okay, so how much you have for the tax expense?
288.
288. Okay, so your RE here will be 912.
91.
Okay, so this is the second journal entry. The first is the same. Okay, the third journal entry is also the same, isn't it? Same as this one. Okay, going to have the fourth one. Okay, the fourth one. To record
Debit
for the
deferred
tax
tax.
effect. Okay, deferred tax. And then
Credit
credit.
tax.
Okay, how much you have for this one?
240.
Okay, which is 24% time with 1,000, yeah? For the currency URP. Okay, and then number 5, journal entries, same, same as this one. For parents. Okay, number 6, okay, for this one, for the NCI. What you have for the NCI here?
Credit debit NCI.
NCI.
Credit NCI.
Okay, what you have for this one?
3430. 30.4.
This one? Okay, later on I'm going to ask you. Okay, and then the next one for this one, we're going to have shares capitals, RE, and then NCI. So what you have for shares capital? Still 6, isn't it? 6.
Yes.
Okay, RE?
2816.7. 2817.6.
Can put it here. Okay. Next one.
8817.
Okay, how you calculate this one? 34 here. 3430. Calculation for this one? Sir?
7,000.
Sorry?
17,000.
17,000.
17,000.
Okay,
Plus
17,000. Plus
912 minus 760
minus 760. Okay,
times with
760 minus 24 from this journal entry, yeah? Okay, this one is from here. Okay, so and then time with 20%. RE is that RE?
15,000 minus
Just 15,000
minus 912
912.
times with 20%.
Okay, so that is what I have. Okay, any difference answer that we have here? Okay, with the tax effect, and then the other one is without tax effect. Thank you, Isa. Okay, so the difference here is only this journal entry. So for this journal entry, going to have the tax effect there. Okay, going to have the tax effect for this one. The difference here in terms of this journal entry, and then also you have a tax effect for the RE brought forward because of the URP, the tax effect for the URP here. Okay, so once it's affect the profit, it's going to affect the NCI for the shares of profit and the returns earning of the NCI. Okay. So any questions that you have for questions 2? Okay. Same answer for questions 2. Any different answers that you have? Any of you? Please. Okay, same, yeah? Okay, the next one we're going to proceed with questions 3. Okay, questions 3. Can we have Lee? We have two Lee. Any of that from that two Lee? Lee, I cannot remember Lee. The names here. Lee, are you there? Can I find here? Participant from Lee. We have two Lee. Lee. Lee Min Hui. Lee, is it okay?
Yes, doctor.
Okay, can we proceed with questions 3, yeah?
Yes.
Okay, so I just want to look at the question 3 first. Okay, this is what you have for questions 3. The same the same statements given, but this time we're going to prepare based on the transactions here is downstream, yeah, because it said that from parents sold to subsidiary. So parents sold to subsidiaries here, parents going to recognize for that profit. So the parents' profit does not affect the NCI. Yeah? Okay, so we're going to prepare the journal entry for this one. Okay, I think that you're going to have the same journal entry, isn't it? Okay, so never mind. Lee, can we proceed here? Okay, we start with the first one, sales, and then Lee.
Cost of sales
Mhm.
40,000.
Okay, 40. The next one.
Cost of sale inventory
How much you have? 1,
1.
and then the inventory 1,
Mm.
The third one.
The
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 third one.
check
For the URP brought forward.
1200.
Journal, the accounts.
Retained earning BF,
Mm-hmm.
and then cost of sales.
Okay, and then the fourth one is eliminations here. Shares capital and RE.
Retained earning, and then credit investment in subsidiary.
Okay, so we're going to have here 32 for investment. Shares capital
24.
This one 8, isn't it? The same. Okay, the next one for NCI. We're going to prepare for NCI.
The NCI for CSPL is 3.34.
NCI to PNL. Going to have here is 3.4.
The 34.
334 or 3.4?
3.4.
Okay, NCI to financial positions 3.4. Where to get this 3.4? How do you have this to this figure?
17,000 times with 20%.
Okay, because the sales is by parents, it does not affect the NCI. Yeah? So, and then the last one, the last journal entry.
Share capital.
Okay,
debit.
shares capital. And then how much you have for this
Retain,
one?
6.
6. Okay, RE.
And then 3.
3.
And then NCI is 9.
Okay, done with that one. Okay, the difference here is any difference where we have the tax effect here. Okay, the second one is with the tax effect. Okay, you're going to have the same journal entry for this one.
We got,
So this one is also the same, isn't it?
yeah,
And then what else do you have here?
different tax.
Journal entry. Okay, extra for this one is deferred tax. Okay, number 3, deferred tax, and then tax expense. What you have for this one? 240.
240.
Okay,
Yeah.
240. Okay, this one is the next one for RE.
RE brought forward.
Okay, RE brought forward. Not sure about this one.
912.
912. And then you're going to have a
Tax expense.
Mm-hmm.
288.
And then you're going to have a
Cost of sales,
mm,
1200.
okay, number 5, going to have the same, same
Yes,
journal entry. Number 6.
also the same.
Okay. Number 6, which one? This one.
The share capital one.
Oh, the shares capitals here. This one. Okay,
Yeah.
this one same, isn't it?
Yes.
In terms of this one, the NCI shares of profit. This one
Yeah,
also.
that one also the same.
The difference here is only this part, isn't it?
Yes.
Okay. So that is what you have here for the downstreams here. Downstreams here, since the sales is by parents, so the profit is only in the parents' account, so does not affect the NCI. So you can compare between the downstream sales and the upstream. The difference here is in terms of the NCI only. Because NCI, we need to consider if there's the sale is by subsidiary, so they're going to affect the profit, so going to affect the NCI. NCI, which is affect the profit for the years and also the returns earning. Yeah? Okay, so done with the questions number 3. So we're going to proceed with question number 4, which is more complicated for this one. Yeah? Okay, hopefully that we have enough time to discuss on questions number 4. Okay, we're going to discuss together questions number 5. Okay. So we're going to analyze item by item. Yeah, I'm going to prepare the journal entry based on the item. Yeah? Okay, so this is what you have for Globe here. Globe Berhad had acquired. Okay, Globe Berhad acquired 70% interest. Okay, going to have here is 70%, 75% interest equity in Setia. On the acquisition date, returns earnings was 12. So we're going to look at here. The RE here is 12. Okay, and then it said that the freehold lands and equipments of Setia is recorded at 5.5. So the lands here is at 5.5. Okay, and then the equipments here is at 4.5. Yeah, this is a cost. Okay, and then it said that but the freehold lands and equipment was said to have a fair value of 8 and then 4 respectively. So the fair value here is 8 and then this one is 4. So means that increased by 2.5 and then this one is reduced by 0.5. Also altogether you're going to have increased by 2 million. So increased by 2 million here, we're going to affect the revaluation reserve. Yeah? Okay, and then it said that there is no adjustments has been made in the Setia account to reflect this fair value. Okay, so the share price of Setia was valued at RM1.60 per shares, and then the shares Setia issue was RM1 per share at par. This is a financial statement. So the first journal entry that we're going to prepare here is to record for the increase in the revaluation reserve. Yeah, so this is your first journal entry. The first one you're going to debit the line. You just check, the journal entries there if you have the journal entry, the items here. Because I'm not going to follow I just follow the items that you have there. So once you find the item, if there are need for the journal entry, you're going to prepare the journal entry for that one. Okay, we're going to start with the lens. I just proceed with this one. The rest you're going to prepare. Okay, the lens, and then you're going to credit the equipments because there is a reducing in the value 0.5. The land has increased in value 2.5, and then the difference that we have here will be a revaluation reserve of 2. So this is the first journal entry to record for the increase in the value of the assets, the lands and also the equipment. So you're going to have this journal entry. Okay, so the next one we're going to look at the items that we're going to pair here. So the item in the income statement that you need to focus here on this one, which is a profit for the year because we're going to allocate with between parent and subsidiaries later. Okay, and then this one is another. All the things here is important here, especially this one, the returns earning brought forwards here is to calculate for the NCI. Yeah? Okay, you have proposed dividend and then you also have a dividend. So one is proposed, one is dividends here means that the second one dividend with is a dividend paid. Yeah? So this one is proposed, the other one is a dividend paid. You're going to have that one, yeah? Okay, and then all the assets that you have for PPE and then all the other assets. Okay, shares capital. Shares capitals that you have here is 80,000 for the subsidiaries. Yeah? Okay, and the return profit here is the return profit on the year 2020, isn't it? Okay, 2019. So this is a return profit in the year 2019. Okay, this is what you have for the equity, loan and so on. So this is only the item. So the other things that you need to consider here is about this one. Loans to, and then the other one is loan from. Yeah, later on we need to eliminate this one. So you have loan to, the other one is loan from. You can eliminate that item. Your ones from and to, you're going to debit your loans payables and then credit loans receivables. Okay. So I just prepare the journal entry for these two. So this item we need to eliminate. So you're going to debit the second journal entry, debit loans payables, credit loan receivables. The amount here is 3 million. Okay, the other journal entry that you need to prepare. Because when you need to analyze the items here, so make sure that when you have the word from and to here, so we need to eliminate that one. Yeah? So that is a second journal entry. Yeah. Okay, so this is information here. Okay, now I'm going to look at the additional information. From this additional information, I'm going to prepare the journal, analyze the item, and then we prepare the journal entry on that one. Okay, so we're going to do this one. So Setia Berhad sold inventory to Globe. So Setia to Globe here means that this one is the upstream. Yeah. Okay. Okay. Okay, so Setia to Globe here is upstream. So upstream here, you have to be careful with the profit. Okay, totaling the inventory here is 7.5 million during the year 2019. Out of this amount, 3 million still remain in the ending inventory of Globe. Yeah. And then the corresponding closing inventory in the year 2018 was 5.2 million. The profit margin here is 20%. So you're going to calculate the URP. So URP, the one that you have here, the first one, this amount here is in the current year. So URP carry forward. Yeah. So URP carry forward 3 millions times with 0.2. Okay, because the profit margin here is 20%. So you're going to have here is 600. Okay. The second one is URP brought forward. The one that you have for the year 2018. Yeah, the brought forwards here. So year 2018, you're going to have 5.2. Okay, 5.2 times with 0.2. So you're going to have here is 10.4, isn't it? Okay, 5.2 times with 0.2. What you have here? 10.1.040. Okay. Okay, thank you. Okay, that is what you have for the URP carry forward and then the URP brought forward. Yeah? Okay, can you prepare the journal entry for this one? Nora, can you just proceed with this one, Nora? The journal entry for this one? Okay, just look at the first one, the source of inventory. We just prepare the journal entry based on the additional information. Later on, you check whether you have that journal entry in your answer or not. Okay, what about this the first one? From the first additional informations. Journal entry for this one, Nora? Okay.
Yang debit cost of sale tu ke?
Tak tahu nak debit apa?
Debit cost of sale 600k. Credit inventories CSFP 600k.
Okay. What else that you have here? You also need to account for tax effect, yeah?
Debit deferred tax
144.
144.
Deferred tax 144.
Credit tax expense 144.
Any other journal entry that you have here?
Debit return profit PF 790
0.4. Debit tax expense 249.6.
249.6.
Credit cost of sales 1.04.
Okay, done. Any more journal entry that relate with additional informations number 1? Nara?
No.
One more supposed to be.
Return profit.
Okay, debit turnover.
Turnover
Mm-mm.
7.5.
Okay, so you're going to have altogether 4 journal entry for item number 1. Yeah? Okay, the first one is relate with the turnover. Just record this turnover, debit turnover, credit cost of sale. The second one is to record for the URP carry forward. Okay, which is together with the effect of tax here. So the tax effect, and then the next journal entries here is to record for the URP brought forward. Yeah. So URP brought forward is already realized. So you're going to debit your RE, debit tax as spent, and then credit the COS. Yeah. Cost of sales. Okay, the first journal and the first items. Okay, yeah. So we're going to proceed with the second item. Okay, any question for the first item? Okay, make sure that you have 4 journal entries altogether. You just check your journal entry whether you have all of this one or not. Okay, so we proceed with the second one. Okay, the second one. Can we have Liu? I think that somebody's name Liu. Have that one, Liu? Are you there? Okay, just read this one while you are ready. Okay, on 1st of April 2018, Setia Berhad sold equipment to Globe. So this one is also upstream, yeah? Okay, for the price of 10.8, the equipment was bought by Setia on 1st of March 2014 at a cost of 14 million. The group policy is to depreciate this type of equipment on a straight line basis over the estimated useful life of 10 years and to provide a full year depreciation if the equipment has been used for 6 months, for more than 6 months. Yeah. Okay, so we need to find the book value here. Okay, the book value or the carrying amount here. So the equipment was already bought in the year 2014. So 14, okay, you're going to have 14, 15, 16 and 17. So you're going to have 4 years 4 years already. Yeah? So you're going to calculate depreciation 14 divided by 10 because the useful life is 10 years, and then time with 4 because the assets has been used for 4 years. Yeah? So going to have for this one is equals to 5.6. Yeah? 5.6 is the accumulated depreciation. Accumulated depreciation. So the book value that you have here is 14 minus 5.6. So the book value here will be 8.4. Okay, and then compare with the fair value. The fair value that we have here is 10.8. So the difference that we have here between these two, we're going to have a profit. Okay, profit from the sales of equipments. So you're going to have here is 2.4. So this is a profit that we have. Okay. So now from the profit here, we want to find the new depreciations. Okay. So the new depreciations remaining years that you have here is 10.8 divided by 6 because the asset has been used for 4 years. Yeah? So you're going to have here is 1.8. The old depreciations here is for 1.4. 1.4. We already calculate this one 1.4. So you're going to have here is 8.4 divided by 6. You're going to have 1.4. So you're going to have a depreciations over provided of 0.4. So another method to calculate this one, depreciations over provided here is a unrealized profit. Okay, profit divided by useful life. So the profit that you have here is 2.4 divided by 6. So you're going to have 0.4. The same. You can calculate either using this formula or using this method or using this formula. Either one. Yeah? Okay, now we're going to prepare the journal entry. Liu, can we proceed with the journal entry for this one, Liu?
Yes, doctor.
Okay, journal entry, please.
The first one is Debit retained earning brought forward
Okay, you're going to debit your RE.
1,520.
1520. And then
Debit deferred tax 480. Debit accumulated depreciation 400. And then credit equipment 2.4 million.
okay, first entry. Other than that,
The second one is debit accumulated depreciation 400. Credit depreciation expense 400.
okay, any more?
And then the tax effect
Ada lagi?
debit
Okay,
ada
and
lagi.
we'll put it here. Okay,
Debit tax expense,
tax expense.
credit deferred tax
96.
96.
Okay, so 96,000, which is 400 times with that 0.24, isn't it?
Yeah.
Okay, so 96 here is 400 times with 0.24. Then you're going to have a 96. Okay, so how do you calculate this one, Liu? The RE here.
Oh,
Can't you find the
RE
amount here? Okay.
Need to
Okay, the profit here is 2.4, isn't it?
minus accumulated depreciation.
Okay,
And
accumulated
then,
depreciation.
and then we need to calculate for the tax effect. Then Baru can get the retained earnings brought forward.
And you're going to time with 0.24, isn't it?
Yeah.
Then you're going to have 480 for this one. So the remaining here, you're going to minus it. Okay, to find for the tax first. No, this one is not. You minus this figure. And then you're going to time with. Ada tak figure dia? Macam mana kan? 2.4. So you're going to have 2 times with 0.24. So you're going to have 480, yeah, isn't it? For this figure. So the balance here will be this amount, 2.4 minus 400 for the accumulated depreciation, and then minus 480 for the deferred tax. At the end, you're going to have 15,1520. Okay. So any different answer? Any of you have a different answer? Thank you, Liu. Okay. Any different answer? Okay. So if not, if you have a different answer, please, for those who have a different answer. So we proceed with the next one. Item number 3. Okay, now we're going to calculate for the goodwill. I don't follow the one that you have in the requirement. I just follow item by item and we analyze item by item. Okay, now it said that Globe used proportionate shares of net identifiable asset method to measure for the NCI. Yeah? So NCI is measured. So assume there is no changes in the shares capital for both a company. Okay, from this one we can calculate for a goodwill. Now we're going to calculate for the first item, which is a goodwill. Yeah. Okay, so let's look at here. We need to find the NCI first. Okay, the NCI value here is based on the proportionate shares. Okay, the number of share, the amount of the net identifiable asset and IA that we have here is 80 from shares capitals. Okay, plus 12 from the RE, and then plus another 2 here is from revaluation reserve. Yeah. So altogether you're going to have 94. Okay, 94. Now we're going to calculate for NCI. NCI that you have here is 25%. Yeah, 25% time with 94. So the NCI value here will be 23.5 here, 23.5. Okay, now you can calculate for the goodwill here. So the goodwill here is the parent's investment. So parent investment, how much you have for the parent investment? It's not mentioned there, but you can find that one in the segments of financial position. So the parent investment here is 78 million, yeah, 78 plus 23.5 from the NCI. This is the parent, this is NCI. Okay, and then minus net identifiable asset is 94. Okay, so the amount of goodwill that you have here is equals to how much of goodwill that you have here is 7.5. Yeah. Okay, this 7.5 here is solely to parents, yeah, because there is no goodwill for NCI. Yeah. Okay, so item number 3 here is used to calculate for the goodwill, which is answer your first question. Calculate the goodwill on consolidation. Yeah. Okay, we have done for question A. This one is for question A. Okay, so you find the goodwill is 7.5. Any different answer? See, do you have a different answer for a goodwill? 7.5? Any of you? No? Okay, so the next one. Can we have next one? Lim Chiani. Are you there, Lim? Lim, can you prepare for our dividends? Okay, can you prepare for a dividend, Lim? Okay, we have proposed a dividends and also paid dividends. So we have two types of dividends here. How about this one?
The first journal entry is debit dividend income,
Debit dividend income,
then debit NCI,
debit NCI,
credit dividend paid.
debit dividend paid. Okay, how much you have for this one?
The income is 2.25 million.
Sorry? 2 point?
The dividend income
Okay.
is 2.25 million.
250. This
Then
one?
NCI 750,
Mm-hmm.
3 million.
Okay, this one is for dividend paid, isn't it? Okay. You
Then
have another general
for the
entry, proposed dividends.
okay. Then for the proposed dividend is debit dividend payable
Debit dividend payable.
7.16 million.
Mm-hmm.
Then credit dividend receivable
Mm-hmm.
5.37.
Mm-hmm.
Then credit other creditors
Mm-hmm.
1.79.
Okay. Done. Any other journal entry? Okay. Proposed dividends. So for proposed dividend, we need to have two journal entry. Yeah? One is debit dividend income. Okay. And then credit, debit also NCI. And then credit proposed dividend or dividend proposed. Okay, dividend proposed that you have here is 7160. Dividend income here is 5370. NCI here is 1790. For the proposed dividend, you should start with this journal entry and then the second journal entry. We start with the credit proposed dividend first. Okay, after that, from the proposed dividend, it become dividend payables, debit dividend receivable, and then others creditor put it under NCI. Okay, Lim, okay, Lim? Lim?
Okay, doctor.
So we're going to have two journal entry, Lim, for proposed dividend. For paid dividends, only one, yeah. But for proposed, we need to have two journal entry. We're going to have this one. This is to be the first journal entry, and then this one will be the second journal entry for a proposed dividends. Yeah? Okay. So number 5. Okay, item number 5. Okay, Globe Berhad acquired 55% interest in the equity capital of Tower Berhad on 1st January. Okay, Tower profit for the years here is 3.5. So this one is related with the investment in associate. So for investment in associates here, I'm going to answer for this one. Any of you? Eddie, are you there, Eddie? Eddie? Okay,
Yes,
Eddie, can you proceed with number 5? Eddie? I will proceed with number 5, Eddie.
hang on.
Yang when the associates, this is associate announce the profit here.
The journal entry, right?
Eddie? Again?
It's
Number
the journal entry.
Journal entry, prepare a journal entry for this one. For items number 5.
It's debit investment in Tower Berhad, 1.225 thousand. Then credit is share of profit in associate.
Okay. And 225 also. Isn't it?
Yes. Yes.
Can you proceed with the next one, Eddie? Number 6. When Tower
Okay.
declare a dividends.
Debit dividend income 262,500.
262,500. And then
Credit investment in Tower Berhad.
262,500, isn't it? 262,500. It's okay. 5 or 500, yeah. Okay, make sure that your figures here, if the one that with another 3, this one should be another 3, yeah. This one is okay, but you need to be careful with the figures, yeah. And make sure that, okay, so number 5, number 6, done. Okay, so what else that we have here? Okay, for number 7, Eddie can proceed with number 7, Eddie? Okay, number 7 here, Tower has inventory imbalance with 30% of the selling price amounting 7.2. The inventory was purchased from Globe. So this one is also upstream sales, upstream sales. I don't know, inventory balance, this one purchased from Globe, this one is a downstream. Okay, what about this one? The next one, inventories here. It's related with the URP also. Selling price ending inventory balance 30% of selling price amounting 7.2. The inventory purchase amounting. Okay, what about this one? Journal entry for this one. How much the sales actually?
Sale 2.52 million.
2520. Okay, what about the URP that we have here? Any URP that you have? Because of this one, isn't it? Not sure for that one. URP. Calculate for URP 7.2, isn't it? Time with 30%. How much you have for this one? The URP. Didi?
It's 2.16 million.
Okay, and then this one need to time with 35%, yeah? Because the shares and associates here is only 35%. So how much you have for this one? The amount of URP that you have here.
756,000.
756, yeah? Okay, so now you can prepare the journal entry. You prepare the journal entry. You're going to debit.
Debit sales 2.52 million.
2520. Okay. Then
Credit investment in Tower Berhad 756,000.
oh, Okay, 756. Okay, and then
Cost of goods sold, 1.764 million.
1,764. Okay. Anything else that we have here? Any journal entry? Only one journal entry ada. Ada lagi tak journal entry for this one? Only one. You have the elements of URP there. So we need to account for a deferred tax also. So you're going to have a deferred tax to account for the URP. URP that you have here is 756. Okay, and then credit tax expense from here. Time with 24%. We're going to have here is 18144. Okay, done with that one. Okay, so thank you, Eddie. For the last one you need to prepare for the NCI. Okay, so for the NCI, any of you want to prepare for the NCI? We need to find the rest. Whose will be the next one? Can I proceed with the next one for the NCI? Lai Yi. Are you there? Okay, can we proceed with the NCI?
Yes, Doctor.
Okay, proceed with the NCI.
Debit NCI CSPL
Mm-hmm.
2622600
Two.
2622600
22,660.
no 2622600
Okay. Okay.
and
Then
credit NCI CSFP
the same amount. Same amount, Okay.
and
Other journal entry.
debit share capital
Mm-hmm.
2
20.
million
20 million.
and then
RE.
RE 5047400
Okay. What
and
else?
then revaluation reserve
Mm-hmm.
500,000 and
Okay.
then NCI
Mm-hmm.
25547400
Okay. Okay. So this is for the NCI. Okay. The second one is the correct one, but the first one a little bit difference. So, do you have the answer for this one, for the NCI here? Any different answer? Do you have the same as what Eng has, or you have a difference here? Are you there? Same?
I have a
You
different
have a
answer.
difference. Okay, what do you have for that one? Okay. The second one is the same, isn't it? But what about the first one? The first NCI to PNL here. What do you have for this one?
I don't think mine is correct as well, Doctor, but my answer is 2,592,000
2,592 okay,
and 200.
and 200. This is your answer for the NCI PNL.
Yeah.
NCI for PNL. Okay. Okay. But mine is a difference. Okay, you only know this one. Okay, we need to calculate this one together. Okay, so profit for the periods. Maybe I need some space here. Okay, where can I find a space? Can I put here? Okay, can I put it here? Okay, we need to calculate together this one. So because the answer is a difference, the one that I have here, so the is going to calculate for the profit for the periods. Profit for the periods, the one that we have here is, if you look at in the statements of comprehensive income, still have time, isn't it? Okay, segments in a comprehensive income, the profit for the period was 98500. 52. 9852. That one is for profit for the periods. Okay, so profit for the periods, that is what we have. So 9852. Okay, and then we need to minus 3 millions. Okay, 3 millions. 3 million, 3 millions. Okay, and then you're going to minus URP. URP carry forward. Net after tax, already after tax. Now which is net after tax will be 456. Okay, and then plus URP brought forward. Net after tax. Okay, going to have here is 790,400. Okay, plus depreciation adjustment. Okay, this one also after tax. Going to have here is 304. Okay, all together you're going to have 7490 400. And then time with 25%. So later on I explain this figure, yeah? Okay, so you're going to have here is 1872,600. So your answers here for the first one. Okay, so the answer for the first one is debit, NCI, PNL. Okay, PNL 1872,600. Credit, NCI, financial positions here, financial positions of 1872,600. Okay, I explained to you about this one, yeah? Okay, so you may have a different answer because if you look at here, this is the profit for the period. It's already given. It's already given. So we need to minus 300 here. So we need to minus 300 here because of dividend paid for the current year. Dividend paid 3 millions. Going to minus 3 millions here. And then URP brought forward. So the amount URP brought forward, the one that you have here is 600. 600 here is the total amount. So you need to time with 0.76 because you want to find net after tax. So net after tax, you're going to have 456. Okay, and then for the URP brought forward, the total amount of URP brought forward is 1040. Also time with 0.76. So you're going to have 790,400. Okay, depreciation adjustment that we have here is 400. Time is 0.76. Altogether is net after tax. So this is the amount that you have for the net profit and scale, and then this amount need to time with 25%. Okay, then your journal entry will be this one. The second journal entry is correct, but the first one here. Okay, any of you have a question on this one? Is you okay with that one? Okay, you don't minus for the dividend paid. So means that your figures will be different. Yeah? Okay, that's why you have 2 million something, isn't it? Because you don't minus for a dividend. You already minus for the URP, you minus for the plus URP and depreciation, but we forget about this one, the dividend paid. Yeah? Because the dividend paid is using, or we use the profit for the period to pay for a dividends. So be careful next time. Make sure that this one. Okay. So, Uy, okay, Uy? And Lim, okay? Not Lim, Okay, so done with that one. So we still have a few minutes here. Okay, I just give you the answer for the statements of the. I just show you. You check, yeah. I show you the answer. You check for the answer. Questions 4, isn't it? Okay, I think that we're done with all the journal entries. So we're already done all for the journal entries. Okay, so this is what you have. Okay, done with that one. Okay, so this is the consolidated. You just check. Later on, Nora. Okay, I just want you to check again based on the answers that you have. You check the figures on it. You check this one. Check for the consolidated statements of profit and loss. I just show you here. And then after that, you prepare for the statements of balance sheet. So your balance sheet statements of financial position. Now, later on, I'll explain to you about this one. Yeah? Okay, so from the profit that you have here, total profit that you have here, 22 here, we're going to allocate to NCI. So for NCI, we already allocate 1.8 something, yeah? 1.8. So 1.82. So remaining to parents here is 118,368. Okay, just check for the figures here. Okay, and then we prepare for the statements of financial positions. We're going to discuss again. I'm going to show you again for the answer for the statements of financial positions. Okay, Nara, let on. Okay, just show you. Is it okay with this one? Okay, check your answer. Difference? Is it difference? Wait, is it a difference or with the answer for the statements of comprehensive income here? Or P&L here? Sama ke? Tak sama.
Different.
Totally different. But at
Yeah.
least the parts turnover okay, isn't it? COS
Yeah.
okay.
Yeah.
The parts
Yeah,
that are
because
different.
the journal entry, some of the journal entries I made was incorrect. So I know my mistakes.
Okay, so you missed some of the journal entries, so means that at the end your profit statements will be different, isn't it? Okay, so I give you the answer for the balance sheet. Okay, so this one is a changes in equity. Okay, changes in equity. So can we bring this one? So complicated. Question 4 is very complicated. So this is what you have. So just show you. Okay, you prepare based on this one once again. Okay, there is a difference. Okay, check the answer. Okay, please make sure check the figures. Just put the figures there. Okay, and then try to prepare that one once again. Maybe you miss some of the journal entries. That's why you're going to have a difference here. Your figures in the statements will be different. We prepare the elimination. So we prepare the elimination for parents. So elimination for parents here is ordinary shares. I think that we don't prepare this one. Yeah? Elimination for parents UI before this. Okay, for parents UI, you're going to have the shares capitals. Now you're going to have RE 69. This one is for parents, yeah, for parents. Revaluation reserve. Going to have here 1.5. And then you're going to have a goodwill 7.5. And then you're going to have COI 78. Okay. We will prepare this one. So just check the answer and then try to prepare that one once again. And then we're going to discuss again next class. If you try to prepare but you still have a different answer, then we're going to discuss again for the next class. The statements, only the statements. Okay, Naura, back to you. Which one, Naura, that you have a difference here? Naura, which one? Okay, for those who want to, so before that, for those who want to leave the meeting, because it's time already 11:23. For those who want to leave meeting, you can leave the meeting. Okay, for those who want to stay, that's okay. Naura, I'm going to answer your questions here. Sure, Naura?
Yang 5047,400.
50?
47,400.
Which journal entry that you refer to?
And before NCI.
Before NCI. Okay. So we move back to this one. Before NCI. Huh? Which one? This one. 2520 or which one?
Yang 5047 tu. Yang ni
This one. 5047. RE. Oh, RE this one. Okay, mana dapat figure tu? 5047. It's RE. Okay, so the RE that you have here is 22. Where can I put here? Okay, can I put it here, Laura? Okay, your RE, Okay, so RE that you have here is 22,500. The one that brought forward, 22,500. Okay, and then minus 790. 790 400. Okay, and then minus 1520. Okay, so this what is this thing? 22,500 here is the URP. Sorry, this is the beginning balance. Beginning balance. This one is the URP brought forward for the URP brought forward for inventory, and then 1520 here is the URP brought forward for machine or equipment. I cannot remember. Okay, machines or equipments here, and then you need to time with 25%. Then you're going to have 5047. Okay, brought forward 22,500 here. Should use the beginning of the year. So the rest, if you want to leave the meeting, you can leave the meeting here. Okay. Yes. Mm-hmm. 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 Dividend paid. The questions that we have in the examples. Uh-huh. Okay, the profit that we used last time, we do minus. I need to check that one again. Okay, wait. Because you are running out of time, so some of your friends still want to know about that one. So you want me to check why we need to minus that 3 million? Mm. Mm. Mm-hmm. Mm-hmm. I'm going to check that one. What is the difference between these two? So I'm going to give the answer for the next class. Is it okay? Because we need to discuss together. Okay. Some of your friends still want to know about this one. Okay. So any other questions that you have? Okay, maybe I need to share again the attendance. So just stop this one for a while. Stop sharing for this. Okay, we're going to discuss again these questions for the statements. Okay, for the next class. So the next class, this question together with question 5. And then if you have time, we're going to proceed with your notes on chapter 3. Okay, for those who want to leave the meeting, you can leave the meetings now. Okay, so for that dividends, keep for the next class. Okay. Okay, so thank you. So we're going to for the next class.